Alright, quick video today, guys, on AeroVironment Inc. As always, a quick company description. It's a US-based defense technology company that designs and manufactures unmanned and autonomous systems. So think things like small drones, loitering munitions, so like backpack portable drones, unmanned ground vehicles, and then other miscellaneous things like software, sensors, and analytical tools for governments and defense departments. So obviously, with them being US based, they're primarily used by the Department of Defense in the US and also its NATO allies, with increasing uptake by the NATO allies and basically expanding internationally in other markets. So as at the 20th of June then, the price was hovering around $190 a share, with 46 million shares in issue, giving it a market cap of around $8.6 billion. They have around $47 million in cash, $59 million in debt, giving then an enterprise value of around still $8.6 billion. Having a quick look at their revenue then, so these are based on the FY24 figures. They hit around $700 million in revenue, which was up around 33% year over year. However, it is actually worth noting as of Q3 2025, they're actually now struggling a little bit, especially with top line revenue, where they hit $167 million for that quarter, but then they were forecasted to have around 195 million, and they attributed the significant drop in revenue due to basically the high winds and fires that we saw in Los Angeles in the past year. So that's something to keep a note of. In terms of their revenue breakdown then, between their three primary segments, which they like to break it down between uncrewed systems, loitering munition systems, and then the MAC-ready works, which is basically the UAVs and stuff like that. We saw significant year-over-year increases in both the uncrewed systems and the loitering munition systems. So around 60% in the loitering munitions, and then the uncrewed systems had around 30% year-over-year increases, whereas the MAC-ready works was a flat year-over-year pretty much. Their main cost drivers then, as you'd expect, are manufacturing and materials costs, so things like electronics, sensors, munitions. They also have very, very high R&D spend, so R&D accounts for around 12 to 13% of their revenue, which again, as a company of this size, you'd kind of expect, being on the forefront of military technology. And then they're also seeing a rise in SG&A, which again, as you'd expect, with any company that grows, selling costs, general and admin costs are always going to rise. But with that being said, they're still maintaining a healthy gross margin of around 42%, and they also actually returned back to profitability in FY24 after a couple of years of being basically loss-making, which we can cover in the abridged FS. In terms of then the sector and competitive positioning, as we've already mentioned, they are in the aerospace and defense space, primarily again focusing on unmanned systems and defense robotics. They're actually a market leader in the UAS segment, so the small drones part and the uncrewed systems. They're actually a market leader for the US military, and they also have a dominant position for the loitering munition system segment as well, via their Switchblade series. In terms of actual competitors then, as you'd expect, Lockheed Martin, Textron, RTX and Elbit are going to be competitors, especially obviously a company like Lockheed Martin, which covers pretty much everything within the defense segment. And then also companies like Anduril, who are very obviously popular but privately owned at the moment, and I think they're maybe IPOing in the next couple of years, but as of right now, they're still privately owned, so obviously they are also a competitor. As with all analysis, I also like to look at the potential moats and advantages a company has, the qualitative aspect of a business, not just obviously the numbers and quantitative side of things. So in terms of any potential moats for AeroVironment, they obviously are a DoD incumbency, so they obviously have a long-standing supplier relationship with the Department of Defense, which is always good. In terms of IP, they actually have over 300 US patents across primarily again drones and autonomy. And then they also are quite vertically integrated with all their products and services they provide, which again provides economies of scale and decent gross profit margins, as you saw earlier. In terms of growth outlook then, so the military drone market actually has a target addressable market of around 16 billion as of 2024. However, this is actually forecasted to grow 3x to around just under 50 billion by 2032. So in around 7 years or so, the market for military drones is actually expected to nearly triple. We're already seeing an incredibly strong demand, obviously due to the conflict in Ukraine and Russia, where, as with all wars that always come around, there's always some new innovation or some new, meta, I guess is a good word to use, that always comes about that people don't really foresee. And I think from the Russian-Ukraine war, what this particular innovation or, I guess, specific new revelation was the fact that drone warfare has become extremely prevalent, and that it's essentially what future governments, especially China, are also looking into, and now the US, in terms of future warfare, is primarily what's going to determine the success or the failure of future warfare, in my opinion. Simply because, you can manually control these drones. They have a significant impact. They're super cheap to make, and they don't obviously come at a cost of any life. If you were to fly a drone with an actual pilot inside, you could have a loss of life. And obviously, the jet planes and things like that are extremely expensive. Stuff like stealth bombers as well. Whereas with a small drone, very cheap to make, very quick to make, and doesn't come at a loss of your own personnel. So as I say, we're also seeing a massive international sale ramp up. So 50 plus countries are now targeted. And there's also new products in the pipeline, slightly larger drones, pseudo satellites, which would be interesting, and then also AI powered swarm tech, which again, super interesting. So coming over to the abridged FS then, so as you can see, 2025 is pretty much in line with 2024 due to the operational difficulties the company has been facing so far this year. However, in 2026, they themselves believe they will hit over $1 billion in revenue, and I'm forecasting around 1.1 billion, which then for that to kind of flatline in 2027 as well, although profitability is to increase by 2027. The balance sheet is pretty good, so obviously total current assets of 500 million versus just around $150 million in current liabilities, with then total debt of around 60 million and total liabilities of 200 million, versus obviously having total assets of $1 billion. So a very healthy balance sheet. And then the cash flow, kind of what you'd expect with a growing company, isn't great, although from operations the last 2 years they have been net cash flow positive, although from the levered free cash flow the last few years has been negative. So it's not well established yet, which again you'd kind of expect from a growing company. The sector analysis, usually I love going into these quite in depth, as you can probably see from my other videos, but with AeroVironment, it's a bit segmented. So as you can see here, we have pure drone plays, but then we have the larger defense companies who have defense divisions, and so it's kind of hard to compare between the two. So we won't really go too much into it. You can kind of pause the screen, or I think I forgot to mention, as always, the first link in the description. If you want the file for yourself, you can go grab it and kind of go through it in your own time, or just kind of look into things a bit deeper, because again I'm going to kind of skip over the next few tabs now. So as always, I do a SWOT analysis with some pro tips. The SWOT analysis looks at strengths, weaknesses, opportunities and threats for the company. Again, you can kind of pause the screen or go into it yourself, but it's pretty much a lot of things that we've covered, and also some kind of, I guess, interesting macro nuggets like geopolitical risks and things like that. There's also then the classic Wall Street insights I like to do. So I like to have all the points for the bull case and all the points for the bear case. Again, you can kind of read that in your own time. And then some technical indicators via moving averages, and then TA in terms of like resistance and support levels. And then we've also summarized the Q3 2025, which was the most recent earnings call, which was at the beginning of March. Then that leads me down to the fair value price targets. One thing to, I guess, factor in for this one is the fact that, like I said, 2025 is going to be suppressed, and we're going to see a good jump up in 26. So these price targets, I think, are very, I guess, prudent, just because the fact, again, you're basing it off of a quite poor year. And then as long as they hit the 2026 numbers, I think it will probably shock the market, to be honest, and it could be actually a good trade opportunity. I don't know about investment opportunity, but definitely a trade opportunity. China, obviously the arbitrage between what the market expects and what they end up doing. I think going into 2026, this could actually be quite a decent trade, and the fair value price targets could actually significantly increase. We're also seeing a decent gap up, actually. So a direct competitor is Kratos, so they're near the 52-week high, and then we compare that to AeroVironment, not who are quite significantly off their 52-week high. It does leave some decent upside if the market continues to boom within this segment. So as always, I like to value the companies based on top line and bottom line, so revenue and earnings, and then also splitting that then between market and reasonable, where the market is then just essentially the prior year multiples, and then the reasonable is just basically on the analysis I've done, what I believe a reasonable valuation multiple is for that company. So I usually like going quite in depth in this part where I have like a nice explanation of everything, but given the circumstances around the company, I've kind of gone kind of basic. And yeah, as of right now, I'd say the company's probably fairly valued, if not slightly overvalued. But it's definitely one to keep on the watch list, because if they can really start executing, and taking advantage really of the potential 3x in total addressable market for the military drone segment, there's some significant upside here for the company, and I wouldn't be surprised if it's has a market cap of over 10 billion within the next couple of years quite easily. So there's definitely some decent upside. It's not something I'd buy right now, but it's definitely, again, like I say, something I'd keep an eye on going forward.